Stavros Tousios for M4Markets. Good morning. We're going to have a quick look at the prices of gold and also what's happening with the pound. Gold has, due to the divergence identified here, of course, started to slide, right? And what we saw and what we've also spoken about last time is that in case we get and slide back within this channel, it would be possible that we're going to get a potential rejection at the 61.8. That was close, didn't exactly get to that level. There was a miss and prices moved up above the channel now, right? While at the same time, guys, we do have a hidden bullish divergence here, I would say, right? Look, from here to here, we missed that. There is not flatness here. That's a higher low. And we have, of course, seen prices moving up now. The question is this divergence going to be strong enough to go towards the 1975? Well, in my opinion, look, we are just at the close at the very 50 RSI. And we have, well, typically, the assumption is that we're going to go all the way up to the overbought territory once again. But, if we did so, that is going to give us another signal. Since we're outside the channel once again, okay, and since we're above the 50 RSI, okay, then there is potential that we see the previous high once again, 1950 and perhaps even 1975, as long as we remain above that channel, but not necessarily like the moment we go into the channel again, we turn bearish. It's not how it works. We have to pay attention to the 50%. Typically, that's where sentiment changes in the short term if we're talking about this specific leg. So 1915 in case of a correction and then further continuation to the upside, or that was a test of the territory initially and we're going to fall below the 1900. So this is a very important range, $50 range, guys, and we are now just pretty much in the midst of it, expecting to see the next moves ahead of the FOMC. It's likely to be a sideways market, and then of course post FOMC, it's where we're probably going to see either a reversal or a continuation of the trend. Now, when it comes to pound, we came and retested that level, guys, and we started falling. Okay, of course we have identified this signal over here. We are falling. We haven't actually managed to go above that previous high yet, or this high, and we keep falling slowly. However, we are finding support at 23 psychological level. This is the third time over the past week, okay, and that suggests that these could indeed hold. If we are lucky enough and we get a triangle here, we could see another leg to the upside and then perhaps fall or not. We are going to see how price action develops in the future to decide on that. We don't specifically need to get back above the channel or anything because this is an accelerated trend, but we do prefer to stay above the 50% because that leg to the downside, it's a long-term move to that we've just actually tried for probably the third time to stay above. We want to change sentiment here in the long term above 123, which is a 50 Fibonacci, and we haven't managed. Now it's holding. The question is, can it hold after the FOMC as well or not? These small downside legs, guys, you can consider them as false breaks because prices eventually manage to go back up, although they don't go outside that range, which means we might have a triangle here. Triangles typically have 5 waves, okay, and you can see we have a cluster here as well, which means that if we do have that A, B, C, D, and E, we don't need to go back to the 50, probably go up for another leg to the upside. And the other thing to do is the typical measured move of the breakout, but we don't know the breakout. If we assume the breakout will be a 123.42, then that can also look at around 125. Okay, so now things are going to start getting a little bit more complicated because we don't have signals here as well. Once we lose 122.61, and today that might be the day that we lose it if the FOMC ends up being more hawkish or Jay Powell more than markets expect.